You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it's time once again for the Option Block. A little show we like to call around here. That's a little, your fun bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom. Throw on some strategery on Mondays, some listener mail on Thursdays, and of course every day, some unusual activity and some breaking down of what's trading in ye old marketplace. And you have the program we like to call the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. Certainly expanding these days. 14 programs. 14th just hit the network a couple weeks ago, actually. So this week in Futures Options, as the name implies, we break down all the cool stuff. If you like the Odd Block on this show, you might like This Week in Futures Options. We take that same analysis and apply it to things like crude oil, corn, gold, all that fun stuff. So if you're interested in that kind of stuff, kind of a first of its kind kind of program. So check it out. It's pretty fun. A couple episodes in the can there. You can always find it, of course, wherever you find our favorite programs, iTunes, TuneIn, Stitcher, including the new listing of Google Play. I know some of you are still writing in saying you have problems with Google Play. Don't blame us. That's on Google. They roll out everything in beta very slowly. So if your handset isn't approved, just wait another day or two, and hopefully it'll be available up there. In the meantime, of course, you can always just grab our mobile app available for iOS, and of course, a lot of you Android listeners like to use the mobile app as well. And of course, while you're there, send us your questions, your comments. We love to hear from you guys. And that voice in the background, listeners, means I am joined live by the greasiest of greasy meatballs, Mr. Mark Sebastian from Option Pit by way of the Carmen line. Mr. Greasy Meatball, welcome back to the Option Block program. Sir, live in studio.
I know. It's great to be here. It's always fun to do it live in studio. It's get to banter about. You and I can kind of chat about things that we're looking at ahead of time. I'm excited about that Futures Options show. I think that's...
Have you had a chance to give it a listen yet? It just came out, so probably not.
No, I've not, but that is on my short list of things to do, as I find most of the Options Insider Radio Network to be destination listens.
Destination listen. We keep your commute exciting, interesting, informative. And once in a while, if you can tune in live, we like to educate and inform you guys
and every now and then a good wisecrack joke here and there.
We've been known to have a few pearls of hilarity on the program.
I was going to say I'm a little sad that Stitcher and Aha Mobile got dropped off.
So many names I can say in the open.
The front end of the intro.
Don't worry, listeners.
Sorry, Stitcher. It's still there. Don't worry.
You can still get it on Stitcher. In fact, we added 20 to Stitcher just the other day, so you can still get your Stitcher. And you can still get your, I think Aha Mobile's still around too. Usually it's mostly in-dash stuff for cars. So if you're in your car and you're not using like an Apple Play or a Google Android car, whatever the hell they call the Android
one. Mean, what a no offense to Aha Mobile, but that's a terrible name for a company.
I think they were just a division of Harman Kardon, or they were a separate standalone thing, then they got bought in by Harman Kardon.
Kardon?
So now they are in-dash audio, or at least they were until
that's a better name.
Harman Kardon. There we go.
Harman Kardon? Really?
The Harman Kardon. The speakers,
Harman Kardon?
The stereo speakers. You know those guys?
Oh, Harman Kardon. Got it.
Yes.
Got it.
All right. Before we go too far down the rabbit hole of audio, let's also welcome on Uncle Mike Tosaw from that little land we like to call good old... I'm blanking on the name all of a sudden. St. Charles, thank you. All right, Uncle Mike, how are things? I know why, because I don't have your brochure on my desk right now.
I know.
That's why I'm blanking on the name. I just moved it the other day, so now I totally forget.
Sebastian must have swiped it on you. I thought I saw him over at Carol's Garden the other day, or over at Lynn's Garden the other day.
I was. In fact, I was. I was gardening and shopping in beautiful St. Charles.
Well, I got to claim umbrage in terms of the Stitcher and Aha Mobile. I think they're great names, and I think they deserve many plugs just as much as the Dollar General, as well as Lynn's Garden.
There you go.
Yes.
I apologize.
Everybody loves themselves some Lynn's Garden. They also love some trading blocks. So without further ado, let's get right to it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, that tune means it's time for the Trading Block, the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. A bit of an upside, particularly towards the end of the day. Most of the major indices closing pretty strong, pretty firmly in the green today. The S&P up a little over 0.75 of a percentage point or so. The Dow about similar percentages. The tech-heavy NASDAQ leading the rally up about 1%, of course. And all of this green on the screen means a little bit of red in the land of ye old VIX cash, off about a little over a handle or so, right around hovering around the 1460 level here at the end of the day. A lot of interesting stuff. And Mark, you and I were talking before the show about that kind of a little bit of a turnaround that kind of materialized towards the end of the day. So perhaps we'll start there. What really caught your eye in today's activity, sir?
You know, I think if you want to know what's been kind of this subtle driver of volatility over the last 3 days, I mean, things were essentially dead until Thursday, kind of midday. I made a comment in my research note that 10-day realized volatility as of Wednesday morning was the lowest that had been in over a year. Things had gotten that low in terms of from a realized vol. 20-day got real close as well, and we may get there. But then it's really been the Nikkei that's been kind of, ancillarily pushing things around a little bit, and it took itself a little break today and rallied a couple of percentage points after losing 13% in 2 days, and that was that Euro USD trade. So VIX getting smashed.
Are you guys starting to sling some FX over there in the land of Harman Kardon?
No, Harman Kardon.
Harman Kardon.
Harman Line. No,
you got me saying Harman Kardon.
Harman Kardon does sound like a trading firm, though, doesn't it?
It does very much, or a law firm.
It does. Harman Kardon and Kardon would be the law firm. Harman Kardon's the trading firm. So, yeah, I think that, one piece I did notice, Apple maybe finally stopped dying, although it opened up really ugly this morning. And we saw some strength in Facebook and some of the other names there. And, yeah, VIX, after making kind of an overreaching move on Thursday and Friday, especially the futures. I mean, at Friday morning at one point, I think the VIX was up 1.1 and the VIX and the futures were up a full 1 point. I mean, there was a strong move.
You know why it does that? It does that just to embarrass us during the volatility views when we have to guess. Yeah. That's when it makes the wildest move. Then it settles out for the rest of the week. Then Friday, between the open and close, it has the biggest range of the week. Just enough to make everyone's predictions look great and then terrible all on the same day.
Yeah. So it was, it was quite the move. And we absolutely saw a volatility short squeeze happen on Friday morning. And then when that subsided and people figured out that maybe Japan, the world wasn't ending in the JPY USD trade and Japan wasn't going to hell in a handbasket, people decided, hey, maybe I can buy stocks again, and that's what we saw today.
And speaking of seeing things, Uncle Mike, what caught your eye in today's activity, sir?
Well, first thing that really caught my eye was Amazon. If you look at it since its earnings announcement last week, we had a big gap up on Friday, and then we had a lot of continuation today. Amazon closed before their earnings at, I believe it was 602. Now they're up at 683. And that is an impressive move. I don't care how good or how bad your earnings are. That's an impressive move over the course of a couple days.
That was super healthy. You're right.
Yeah, and what's going to be interesting about it is that Amazon, along with the market itself, they're kind of staring highs in the face. The one-year high for Amazon, 696. They're at 683 right now. So and I guess that's actually the all-time high as well. That's something with which they're going to have to fight against. The S&P is Once again, if a couple of really good days could be touching its all-time highs again, but we've been saying that for what seems to be 50 years now, but in reality, probably about 2 years. It just kind of seems like we're continuing to be at that level. The fruit company, Apple, after the earnings came out, I think it now would not be a bad time to do something in terms of selling some puts or doing something as like a short-term trade. I think we will get a little bit of a bounce in Apple just because of the fact that even with Apple having their first decreasing quarter in 13 years or whatever it was, it is still Apple.
And they make
do
a
still
ton of
pay
money.
a dividend.
You're right.
And they do have a lot of cash on hand.
Yeah.
So I think they're going to get some type of a bounce, even if it is a dead cat bounce. Over the long haul, though, they really need to do something to get some type of innovation in. There's talk about them buying Tesla. There's talk about them doing their own car. They got to do something.
Can you imagine the
hype, right thing to do?
hype madness if it was Tesla and Apple combined in one thing?
That would be insane. You know who I think
the internet would explode.
You know who I think they should buy is PayPal. That would be a smart move because Apple Pay sucks, and every young person I know is using Venmo or PayPal, and really more PayPal. And Mike, you know what I was looking at as a trade, and I know you're going to like this one, and we actually wrote this up. OptionPit does some independent research for pre-bond tullet that gets put out, or is it Toulet? Pre-bond Toulet that actually they distribute out to their clients. So this is I'm telling you this now. It's been out for a day. We were looking at the July 92.5, 87.5 put 1x2 for a 25-cent credit, and thought that looked super favorable as a potential way to get into Apple as a kind of a long-term investment. Anywhere really you put that thing on, and your purchase price is whatever it is above 87.5, and below 87.5, it ends up being 82.25. So we like that as a potential way of getting long the stock and or selling puts.
What were those strikes again?
We were looking at the July 92.5, 87.5 put 1x2.
I like that. They just got to innovate something. I mean, I would love to become the Apple Baron of the show again and have you guys making fun of me. Oh, come on, Mike, it's not going to last forever.
Mikey Appleseed, if you will.
Yeah, I would love to be the Apple seed again, but I need there's too much fertilizer in there at this point.
Yeah,
so.
I mean, the watch has just been a disaster. They can say whatever they want, but the idea that watch wearables were going to be huge immediately, I think, was silly. I think that what they need to do is, and I'm with you, they need to make a purchase, and they got all this cash, they should buy PayPal. PayPal is growing. It's the innovation in they're light years ahead of everybody in mobile payments, and that would be that's who I think they should go after.
Problem though, if Apple Pay sucks and PayPal sucks, which I think everyone who's ever used PayPal would probably concur that it sucks. Do two things that suck? Do they somehow come together to form Voltron?
One thing that sucks has a massive amount of market share, and they're doing some things now that they're their own company, not tied to eBay. I think there's some real potential there. Maybe the Venmo would be the other one they should go after then if they want to do a smaller purchase rather than PayPal.
You mean the deal eBay made that made sense as opposed to Skype, which everyone said, why the hell are you buying Skype? There's some interesting history there as well. Yeah, Uncle Mike, is there some level in your mind, regardless of innovation, that you're thinking of right now? I mean, Mark was just talking about his put 1x2. Is there some strike, some level in the back of your mind where, like, if it starts flirting down there, I'm definitely getting myself back in to ride this cash train at least for a little while?
The only way that I would become the Apple Baron again, so to speak, I mean, we would have to drop down to levels that we were a couple years ago, just with the post-split era. That would be, we'd have to get down into the 50s again for me to become the
50s. Wow.
Yeah.
I thought for sure you'd say like 70.
Yeah, I mean, I thought 82 was pretty reasonable. That is, wow.
For a short-term trade, if it's for like a shorter-term trade, yes. But if I'm gonna stake my whole career on Apple, like I did, on those two run-ups, I want to make sure it's pretty darn low.
Yeah, I'm with you there. But the nice thing is, what does the div yield turn into at $82 a share? What I think they've really become is kind of a utility type of thing. Although the one thing that maybe we weren't thinking about is, everybody thought that this mobile phone companies not buying the phone anymore might be a net positive because people could upgrade their phone whenever they want. And it's turning into a
People's going to hold on to their freaking phones for 5 years
people
now.
People are like, oh, wait, I don't have to.
$700. And
I'm not in a 2-year contract anymore. I'll just hang on to this thing. So I think that's going to be a huge problem for Apple. How much bigger can they be? I mean, if they make the iPhone 6S, if they make the next one any bigger, the 7 Plus, it'll just be an iPad. An iPad you can talk on the phone with.
They are in some weird middle ground where the tablets are getting redonkulous, the phone's getting huge.
I know. I'll tell you, the one I'm excited for is the iPhone 6 SE, which is the iPhone 5 with a 6 chip. That's the one I'm going to get if I get anything.
The 3.5, 4-inch screen again.
The one that I have that I love because it fits in my pocket. I don't need my own satchel for my phone.
You don't need your man purse. You still are rocking a nice man purse right now. I should point out to the audience.
Thank you.
It looks very fetching, sir.
That's actually just.
You don't need it for your phone.
That's actually just loose skin.
Oh, there you go.
There you go.
Before we get too gross, let's move on to some other. Don't you wish you were in studio now, Uncle Mike? You could have all these pearls of wisdom in person. By the way, I just tweeted out your Apple price here of $50. So we'll see if we get some. See if we get some debate.
You're gonna get your first Apple hate mail.
People are gonna tune in just to
look at all that Apple.
You, sir.
I'm gonna go retweet that.
Let's move to a different realm of Apple for a second here. We were tweeting last week about our question of the week came in. We were asking you guys, what do you guys think in terms of straddles? Which would be the most accurate at the time when we did it beginning of last week? Apple was pricing in about a 4.5% move. Facebook about 7%. Amazon about 8%. I think we all know what happened in retrospect. They all kind of blew the doors off of those numbers. So I guess the question is, who missed by the least? And in terms of that, Uncle Mike, I think you were guessing at the time. You were on the Amazon train. Is that what you were guessing last time? Do you recall?
Which one was the correct one? That's the one I was on.
Yeah, there we go. Well, our listeners picked Facebook kind of en masse, ended up winning by about 45%. Amazon coming in second with 29%, and close on its heels third was Apple with about a quarter of the votes. And we crunched the numbers this morning. We just did it. We made these basic. So close to open the next day, not after hours range, not the next day, including that range and what was the optimal moment to hedge or none of that stuff. Just straight up from when it closed to when it opened the next day, which one was the closest in terms of predicting power. And they all missed. Facebook, the Apple, the Straddle was underpriced by about 40%. Amazon was underpriced by about a third, and Apple nearly doubled its Straddle. So by Amazon missed by the least percentage. I mean, points, you can't go by point wise, you got to go by percentage. So I guess Amazon wins. It's a dubious win, though, because it's not really winning. But either way, the options market failed everyone last week in terms of predictive power.
In the FANG stocks, yeah.
So we're coming up. We thought that was pretty popular, so we thought we would run that one again this week with who's coming on the docket this week. Mark, avert your gaze so you can't cheat. And then I will say, right now we're asking for, I'm going to turn it away because I don't trust them listeners. Okay, we got the question of the week this week is our earnings straddle battle, Tesla versus Bbock. Tesla pricing in about $20, about 8%. Bbock a little under $5, so about 6% right now. The votes are coming in already. We only posted this a little while ago. Mark, we'll start with you. Which do you think is, I'll give you the choices. It was obviously Tesla or Bbock, then we put in for fun, sell both and buy both. What do you think is winning right now? And then which would you choose?
I'm going to guess that they're saying buy both. And I think Tesla's garbage, as many of you know. And I think it'll be interesting to see. I think Tesla could. I mean, if they moved $20 on that stupid announcement, but what are they really going to announce this time, other than the fact they're burning cash and the $365 million that people loaned them?
Yeah,
that is not.
That was not going to pay for all the Gigafactory.
You know, Mike Coe of the option trader.
He's over at Optimized Advisors.
Yeah, Optimized Advisors now. He was telling me he was like thinking about putting $1,000 down, and then realized that they're non-segregated funds, and
so that
Tesla,
money's just gone.
Tesla could do whatever they want with those.
You just invested in the Gigafactory.
Yeah, what you just did was you took $1,000 and dumped it on a a capital fire.
You know, I'm never going to sell Tesla's ability to drum up some announcement to somehow move the stock. Because look at their last announcement when their numbers were terrible and they came out with this ridiculous thing. Down the road, you're going to be able to start pre-ordering this thing. And just the notion of that, a car that no one had seen and that they couldn't get until a year and a half later. And that news alone was enough to budge the stock.
I think
I won't underplay their ability to hype their stock.
So I think $20, that's an 8% move. I think you could see Tesla beat that. Bbock, I think, is a little less interesting. It hasn't done much in, a year? At this point, it's been kind of boring.
Yeah, it was kind of much ado about nothing. It launched, everyone thought this was going to be the next Tesla or whatever in terms of hype and
just
movement.
turned into nothing.
Hasn't really done it.
So, I think Tesla is going to move more than Alibaba, and and it's probably going to go up, but I would take that as an opportunity to fade the stock because it seems to have a magnet at 240.
All right, so you picked buy both. I guess if our listeners pay attention to last week, that might indeed be their choice. Uncle Mike, where do you fall? Tesla, Bbock, sell both or buy both? And then where do you think our listeners picked? And then I'll give you the current winning answer. It could change.
Got it. I think the listeners will say buy both just based on what had happened with last week. In terms of how Tesla could move a lot, I would agree with that just based on what you guys just said. I could see Alibaba having some type of movement just from the standpoint that I think they're due. If you look at a chart of Alibaba over the course of the last, since they became a company, I should say, there has been a bunch of movement on it. If you look after their earnings their last, some of their previous earnings announcements, there have been some movement on it, and I could see it going above the $6 mark. After all, it was in the mid-80s in April, so I'm going to say buy both, and I'm going to say that our audience agrees with me again, and I'm going to say they're going to be buying both.
You guys far too rational for your own good. We're talking Tesla and Bbock here, so there's a certain degree of hype factor has to be factored in as well. So far, Bbock leading the charge, 38% of the votes. People saying Bbock is going to be the most accurate. So that's the most accurate in terms of priced close to open in terms of the earnings. So the most accurate, yes.
I would agree with that.
And then a Tesla a quarter. So that's and then same percentage to say sell both, which is interesting. Given what we saw last week, people not maybe paying attention. I'd be scared to sell Tesla in any environment in terms of earnings straddles. They always have that random ace up their sleeve they like to play around earnings time. And then 12%, only 12% coming in. So buy both losing demonstrably. So interesting stuff. I would have thought maybe a little bit different. But again, it's only been up for about an hour, so we got plenty of time for this one to play out a little bit more as the names go by. So our question for this week again, Tesla versus Bbock. If you haven't played along, play along via Twitter. Follow us at Options and make your votes heard. That'll go until a little bit after the close on Thursday when Bbock reports.
You need to get this in the Options Insider app.
The vote, we do.
The stock voting.
We don't
system.
produce the app ourselves, so we have to do it in partnership. So that's kind of makes it making upgrades. That's why people ask us all the time, how come the website isn't in the app? I'm like, well, we don't produce it; it goes through our audio partner. So we need to. We were thinking about making our own separate app that kind of combines all of it, which would be cool. Then we could have the polls and the question of the week and all the other cool stuff coming up there. So that's something we're working on down the road a little bit. We like having the radio app. We love that you guys can stream, but now there's so many ways to get our stuff to all the different stores and of course the live stream and everything else. So we don't want to overwhelm people with audio options, but maybe a little bit of text content would be good in there. Speaking of text content, it is indeed the beginning of the month, which means we have the numbers in from last month, and after a year that was kind of weak from an overall options volume perspective, our friends over there at the OCC, the Options Clearing Corp, aka the other side of all your trades, they reported their numbers for April and saying overall exchange listed, which is obviously what they handle primarily, exchange listed options volume about 331, nearly 332 million contracts. A 1% increase, from April of last year. So decent. You'd think maybe a little bit of the rocking and rolling towards the end of the month may have contributed a little bit more. But overall, at least April last year, though, wasn't really a tumultuous time either. So maybe an easier time to. A lot of things play into these numbers and how many trading days got on the month. What was last year's like versus this year?
Well, and we are coming off a period where option volume was kind of dipping and has now started to turn around, which is nice.
Yeah.
I think a lot of people were a little worried about that trend, and I think all the weeklies and all the other pieces have managed to flip around that trend for for the options and option volume.
Yeah, a lot of our brokerage partners, certainly the exchanges, were very nervous about that number last year. Looking, if you're asking, hey, what about year to date? How are we looking year over year from last year? And year to date so far, equity options up about two and a third percentage points from last year. Index options just Kraken, making up new terms here.
Crack it to
up
the
nearly
east.
A quarter. That's crazy town
Wow.
there. I'll have to dig into that number.
Now,
a
is
little
that
bit more.
VIX or is that S&P?
That's S&P, and I believe they count VIX options in that as well. I'll have to dig into how they segregate that, because I don't think they pull SPY into that. That might be a separate
I'd
thing.
be interested to see if Russell 2000, what that's done since they switched to single list. It's going to be kind of an interesting topic of discussion if RUT goes single list and then the volume increases significantly, and that might happen.
Be interesting to see how. I mean, if that happens, Regular is not really going to take a dim view of single listing these days. They've seen all the risks that are inherent in that sort of thing. So that might be one of the last big names we see do something like that. But you're right.
But yeah, if you start seeing that, I mean, there is a, we were talking about meeting Andy Nybo. You saw Andy Nybo last week, and the guys at Tab are seeing some very troubling things about the multi-listed equity space beyond really the first 5 weeks of trading, and really beyond the first front month and the first serial month, and the very front and the first leap. There's really only 3 liquid contracts now, and they keep listing more, and liquidity becoming less and less. It's amazing.
Yeah, he and I were chatting. He was on the show. It'll be on our network this week, I believe, on our long and short of futures options program. So stay tuned for that, listeners. He and I were chatting actually after the show, and he had some recent research about the auctions. That's kind of what they were referring to, and what's really impacting a lot of that liquidity. And surprise, surprise, what's going to happen if you allow someone to kind of sit back and then wait to show their best hand when the order flow comes in? That's exactly what they're doing. So the displayed liquidity and everything else that's really going up there is really being hurt by it. Even though a lot of these mechanisms were put in place with noble intent, a way to try to help the liquidity provider not get run over. I can certainly see the laudable intent behind them, but I think they're having a lot of unintended consequences that people, when we first launched these things, they were cheered, and now they're starting to take a second look and say, wait a minute, why is our display liquidity down? Well, because no one's really showing that much size. They wait for the order to come in, and then they can show all the size they want. So, a little bit of a different beast. Speaking of a different beast, it's time to move on to some of the different trades that caught our eye today, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where we usually break down some interesting, weird, and wild. We're going to do that again today. We're going to do it live in studio, which is always fun to mix it up today. And we're going to start things off. We were talking about these before the show, Mark, and we picked a few interesting ones. Mm-hmm. We've talked a bit before about, some of these weird levered ETF products out there. Well, we got one for you today, listeners. This one is, I don't think we had this on the show before.
No.
I'd recall this one, I believe.
I spend time looking for fun ones when I know that you and I are going to be in studio together.
This is the Direxion Daily S&P 500 Beer 3X shares. Try saying that 5 times fast. What a name.
You mean the DDSB 3S?
Yes.
DDSB 3S?
3X, yeah, everyone's favorite.
Who doesn't love that?
Levered 3X S&P product. Ticker
No,
symbol.
bearish leverage.
Yeah, yes.
Not even bullish.
So everything about this is counterintuitive. SPXS is the ticker, closing today right around $14.80, off about 2.5%. So not a good day for, surprise, rally ho, not a good day for the 3X levered ETF product. It actually does some decent paper, about nearly 4,000 contracts a day, which for
I think it'd be a day trading day.
Yeah, I would hope. I don't think you want to put this in your 401k and forget about it for a couple of years.
Yeah.
Oh, I forgot I had that 3X thing that's not worth zero.
Wow.
This thing does about 4,000 contracts, which is about 10x the names we usually talk about here on the Odd Block. And today doing about a little over 20,000. So some interesting stuff. We've been talking, Mark, I'm not sure if you heard some of the ones Andrew was on last week. We talked about some funky paper of late, like Rolls back and in as opposed to up and out. All kinds of weird stuff that you don't usually see. This one a little bit more straightforward. It's kind of a little bit refreshing. Maybe the underlying is not straightforward, but the trade itself is a little more straightforward. We saw people coming in and loving themselves some July, actually not even upside. These are at the money. The July 14s. To the tune of, when we started these off this morning, paper buy-in, about nearly 12,000 of these guys paying $1.75 and a bunch of big blocks, lifting the offer. So they really wanted these bad boys. As the day went on, a total of nearly 16,000, 15,500 going up on the day. This is all open in paper, Mark. Only about 1,400 contracts open on this strike. So no closing legs, no rolls. A lot of rolls last week as well. It was that week. No stock that we could see going up, or ETF or whatever going up with this thing. It seems to be apparently what it is. Someone really wants themselves some calls on this really, really inverse bearish thing. Yeah. It's kind of wrap your head around that one. I dare you.
Our friend took a break from writing his dissertation that cured all forms of cancer to sit down and go and buy a triple bear daily balanced inverse S&P. And for those of you that aren't in the know, these double short and double longs have all sorts of problems with the daily rebalancing. Well, it gets way worse with triple rebalancing. It's kind of like when a stock splits, how the gamma goes 4x. These daily balancings get worse and worse the more that needs to be done. And so this is one of those names that if this guy doesn't get a rally in a day or two, he's going to be off half of his dollars like that. This thing could be below 14 by the end of the week if he doesn't get his S&P sell-off and thus huge bear rally. So, you know, if it doesn't work out, the good news is he'll probably make millions and millions of dollars solving cancer and all the other things that this guy clearly is doing, because he's clearly so smart that he can buy triple short calls and expect to win.
Yeah, this, unlike we talk about a lot of options having gamma, this is like an underlying with a lot of gamma. This thing is just going probably nowhere really quickly or just exploding, you know.
Yeah, he bought gamma he bought a ton of gamma on gamma.
Yes.
And deltas. I mean, this is just...
This thing is just pure rock and roll. Yeah, this is not, I was joking before, but not really. This is not a thing you want to take and put in your IRA for a rainy day.
Yeah, this guy, unless this is some sort of weird screwy hedge against some variance trade...
I have a hard time calling any paper in this hedging of anything.
The guy who suggested this trade, my guess is more likely than not, let's just pretend this was a newsletter trade. My guess is more likely than not, he's going to lose a lot of subscribers if this is a newsletter. If he is a proprietary trader, it could be worse. This is just nonsensical. He could have done it for a billion times cheaper. More efficiently.
Yeah, he's lifting the offers on these things. Yeah.
Doing this with SPY calls.
He had to get him some inverse 3XPS.
How much do 3 at the money puts in SPY
exactly
it really cost you? I mean,
and what do you think 3X SSPS is actually out there doing?
Think about this. These calls cost 10% of the stock value.
Yes.
I mean, what are you doing?
Just buy some puts.
Just buy some puts.
You're giving them your money so they can go out and buy puts probably for you. You don't know what the hell they're actually doing. I'm assuming they're buying puts.
How great would that be? You sell this,
it's just a Ponzi scheme.
It's
just a Ponzi scheme.
You just ladder up puts. Yeah. And this guy is just, oh my God.
So what's your effective percentage fee on that versus going out and buying like 3 at the money puts?
The only thing I'm regretting right now is that I didn't think to do this till after the bell today.
Yeah, so if you can't tell, listeners, we take a dim view of some of these crazy levered products, and yet these things trade like crazy, list like crazy, and all the regulators come down on on the options being the bad guy. Yet these crazy levered poor man's options are out there just ruining people's accounts every day.
Yep.
And that's a conversation.
How can I lose?
Yes. What could possibly go wrong? 3X short. At least the good thing about that trade is at least you're probably going to know really quickly whether you're a genius or a complete idiot.
Right.
There's not much room for subtlety in that trade whatsoever.
No.
We laugh about VXX and its kind of long, slow ride to zero. This one could be at zero much faster than good old VXS.
Wow.
Let's move on to maybe a little bit more staid name. You never know this one. This is Weatherford International PLC. You know they have PLC in the name, that they're much more stiff and proper and a little British there. Ticker symbol WFT. Closing today, $8.20, pretty much unched on the day. This is the name that does fairly decent paper again as well. About nearly 7,000 contracts a day, doing over 2x that today, about 16,500 contracts today, about 8-to-1 calls over puts. Mark, that'll give you some idea of what we were looking at out here today. In particular, again, we have narrative. I like to have narratives in our odd block, and the narrative today is sweeping the upside. In particular, these were the main nines that paper really seemed to want to get their hands around, to the tune of, when they first started buying these things, about 10,600 at a variety of prices, going from about 24 cents all the way up to 30 cents, the largest chunks coming in the latter category, 29 and 30 cents. Total of nearly 11,000, 10,900 going up on that strike on the day. There is some open interest here, about 14,000 contracts open. So could indeed be additive, could be closing. What are you feeling on this one,
I was
Mark?
pretty sure it was additive because most of the volume was from Thursday and Friday that had created that open interest. So, and Weatherford had not done very much over that 3-day period. So unless this guy really changed his mind on some short calls, I'm pretty sure that it was additive.
He's saying, wait a minute, I should get into that SS. I made the wrong trade.
Oh, yeah. He flipped out of that and bought a bunch of SPXS.
Sell this crap and just buy the good stuff.
Maybe the guy thought he was, how hilarious if the guy thought he was buying Staples calls.
that would be a good one.
Yeah.
That'd be a good one to explain to your investors.
It was Mitt Romney buying calls.
Explain that to your investors. I thought I was in Staples.
What?
Staples can't go to zero tomorrow.
But he could hit the fix-it button. Or
the easy button.
The easy button, yeah. Easy to lose money. That's the button. So these calls, there were some sweepers. They were buying them all the way up. They really jacked around the volatility on the calls so that those were just way too expensive as the day wore on. You could buy you tell me, what would you rather do? With the stock trading 820 and earnings on Wednesday, would you rather own the 8.5 calls for 45 cents or the 9 calls for 30 or 31 cents?
I'd rather have SSPX and XSPX inside. No, I take the 8. So what was it, 8.5?
Yeah, the 8.5s. Yeah, they kind of jacked the vol around. They got a little overbid there. I was able to leg in small, just a 10 lot, a 8.5, 9.5 call fly for even money.
You were piggybacking on this for the call fly?
What I did was I bought the calls and just put an offer out and it got filled.
See the things we do for you
trader
listeners,
hint, folks.
The things we do for you listeners, we sling 10 lots to make sure the trades are real out there.
Yeah, so inside trader tip, folks. If you see people continue to buy calls when you notice paper, buy something around it and leg into a butterfly for even money or a credit. But yeah, this was definitely somebody making a bet that Weatherford's going higher into earnings.
All right, and we'll conclude our odd block here today with name we haven't talked. This is more in Andrew's neck of the woods.
This is one I pulled up for you.
I didn't think this was your neck of the woods here,
Sub
Mark.
1,000 contracts. I figured you'd like it.
Well, Cabela's, I'm thinking more. He's an LL Bean kind of outdoor kind of guy.
I mean, yeah, that's true. I didn't even think about that.
That's I could see him buying himself some waders or fly fishing gear from Cabela's. Talking about Cabela's, of course, ticker symbol CAB. CAB closing today $53.60, up about nearly 3%, or about $1.50 or so on the day. So pretty decent rally today for good old CAB. This name does about 700 contracts a day, doing nearly 6,000 today. Of that 6,000, about 5,000 coming in this one trade we caught our eye today. About 6-to-1 puts over calls today. That should give you some indication of where our interest lay in this one in particular. It was a 5-point put spread, the June 50-45 put spread, going up, paper buying, so buying the 50s, selling the 45s, doing it for about $1.15 or so, 2,500 times. No open interest on the 50s, but there is some open interest on the 45s and indeed on the 40s. So perhaps another vertical had gone up before there earlier.
Maybe.
Perhaps our friend deciding to leg it, make it into a fly. Who knows? You never know what's cooking with these guys. But either way, this paper at least is clearly opening. Looking at a chart here of good old Cab going back a year, and they have flirted with disaster earlier this year, in particular back in October of last year. This thing was trading about $37. So, and even as recently as about February, back in the low 40s. So, our friend here could clearly have some reasonable concern about near-term downside, and deciding 50-45 is where he wants to be. You think that's open? That's what he's doing, a stockholder perhaps hedging, or you think this is maybe somehow linked to that earlier?
They just had earnings, and it looked like it went reasonably well. So I think it was just somebody establishing a near-term hedge, making sure that, some of the recent gains don't run away. And the old saying, though, people who sell cabs end up driving cabs. So
that's old school floor lingo, listeners, for really, really cheap, uber cheap. It's cheaper than a stink, cheaper than a teeny puts or whatever the hell you're selling. I don't think I ever actually traded a cab in my. I saw them go up. I would
buy them to cover. I would never sell.
I guess sometimes you can get them off to cover. Like I'd be the nuisance in the SPX. Give me 50 of those to close out, or 100 of those to close out. I probably bought some.
You always want it off the books. Clears up margin.
But that's funny. I'll think about that. Look at my old. See if I have any of my old sheets lying around.
I think it's probably a hedge or somebody betting on a little bit of reversion back below $50 a share. Either way, probably a little bearish. The outdoorsy folk in the near term. Maybe people should go for the co-op that is REI as opposed to investing in Cabela's.
Yeah, there's REI, there's not Land's End, LL Bean, there's Cabela's, quite the Bass
Dick's,
Pro Shops.
Dick's Sporting
Goods,
quite a lot
it's a competitive field where to buy your tent / expensive, overpriced outdoor gear. Speaking of outdoor gear and overpriced, both things that lead us, of course, inexorably to Uncle Mike. So without further ado, it's Monday. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, the people want to know, but I would not give them any hints, any clues as to what you are up to today. So let our listeners know what's on the docket for today's dose of strategery, sir.
Well, I was inspired by what the option pit guys are doing with Apple. I want to talk about the 1/2 ratio put spread to get into a stock. Not only that, I also want to add to what I would do in terms of sometimes I would sell a put to get into a stock, and sometimes I would use this strategy. Okay, so there's two scenarios. Let's say that you want to get into a stock. It's gotten beat up a little bit, like Apple, for example, and you're thinking about, okay, well, I can sell a put to get into the stock, or I can actually sell a 1/2 ratio put spread to get into the stock. So what I want to go through today is what you would need to, or how I would make that decision, because that's a decision with which I wrestle from time to time. And sometimes I go one route, sometimes I go another. Now, first, let's review both strategies. Let's start with the simple one that most of our listeners probably already know, and that's selling a put to get into a stock. XYZ stock trading at 55. We sell the 50 put for $1, let's say. If the stock goes down to 50, hey, we're excited to own the stock at 50 anyway, and we got paid $1 to do it. However, let's say the stock stays the same or goes higher, you get paid a dividend, so to speak, even though it's not really a dividend, but you get paid premium for not getting filled on it. So you kind of have a benefit either way when selling a put to get into a stock that you'd like to own at that level anyway. Now, the other way with which to get into a stock that you're based upon trying to benefit from the stock coming down and wanting to use options and maybe get paid to get into the stock would be what Mark was talking about earlier on the show with Apple, for example. So let's go back to good old XYZ stock. Let's say that we buy the 55 put. We're going to sell two, not one, but two 50 puts. And we'll make it simple for this example. We buy one 55 put for $1, and we're going to sell two 50 puts for 50 cents each. Comes out to an even money trade, meaning that if the stock is above 55 at expiration, no action is taken, then there's no gain or no loss on the stock because it was even money. If the stock is between 55 and 50, you're profitable for every penny below 55, between 55 and 50, of course. And the profit comes from that long put that you bought. Now, below 50, that's when you start to have a little bit of liability because you sold 2 short puts on it. Now, the way I like to think of that is that you're actually buying a put spread because it's a 1x2. So step 1, you can think of it as buying a put spread. It's like buying the 55-50 vertical put spread. And then you're selling a naked put or a cash secured put, whatever way you want to look at it, to finance the cost of that put spread. So going into the 50 level, you already have $5 of locked in profit. And the reason I say it's locked in profit is because that put was free, meaning you didn't have to pay anything for it. It was an even money trade. Now, of course, we all know nothing in life is really free. We had to take on an obligation to get that free put spread. The obligation with which we took on was selling that 50 put. So everything below 50, you're obligated to buy the stock at 50, even if it's below 50. Now, you already have that $5 in your pocket for anything that goes below 50. So your real cost basis on it would be $45. So if the stock is above 45, then that means you're profitable no matter what. Or I should say you're at least break even no matter what. 1 penny between 45 at 45.01 and 54.99, those would be the 1 penny profit zones, so to speak. And the maximum profit would be, of course, at 50. Now, of course, I'm using all this as the expiration day risk reward graph, even though this is not a visual show, but that's kind of where I'm going with it. But there's different movements for different option strategies before expiration, of course. Now, how do I make this decision as to whether I want to get into the stock at a lower level using a short put or using a put spread to get into it? Well, the first thing is, how badly do I want to get into this stock? If I want to get into it really badly, well, I'm not going to mess with any of this stuff. I'm just going to buy the stock. Keep it simple. If you think the stock's going to go up tomorrow, there's no need to mess with options in something like this. Buy the stock. Or if you want to leverage yourself or limit risk, buy a call. So those are the ways with which, or a call spread or something along those lines. So if you really want to participate in upside right now, then you need to be buying stock or buying calls or buying call spreads. Where this strategy would come into play would be if you think, okay, the stock's going to kind of bounce around for a little bit, and it might even go down a little bit more. But if it goes down, I think it's a solid company. I wouldn't mind buying it if it goes down a little bit more. But I don't really see it dropping and falling out of bed too quickly. And I think it's going to stay relatively sideways for a little while anyway. And by relative, I mean within those strike prices that I just mentioned. So if I have that sentiment, let's look at selling a put to get into the stock. If I think that the stock is most likely not going to go down, or I think if I'm a little bit leaning bullish a little bit on this, then I would look to sell the put. Now, when I say bullish, I've already entered my world of I think the stock's going to kind of stay sideways, maybe go down a little bit. But if I'm leaning more bullish within that sentiment, that's when I would look to sell the put. And the reason I would say that is because what if the stock goes higher? In the one scenario where you're just doing it even money on the put spread, then you don't make anything. But on a short put, you make whatever the premium is. Now, I know that what Markets described earlier was that you could technically still do one of those 1x2s for a credit, but you're not going to get as much of a credit doing that as you would just simply selling a put. So if I'm leaning a little bit bullish, that's something with which I would look into. If I'm more sideways, then I would look, and by sideways, I mean a little bit more neutral and maybe even a tiny bit bearish, meaning I think the stock's going to go down to the 50 level, but I think that's the buying point. If that's the case, then I'm going to do something along the lines of that ratio 1x2. So it's based upon sentiment. But now, let's say that that's as simple as it is. It's really not. The next thing with which you need to look at is how is the volatility lining up? How much premium can you get for those 50 puts? And how much is it going to cost you? Or how much of a credit are you going to get? Or can you get an even money trade on that 1x2 put spread? I've done 1x2s for credits, even money, and debits throughout my many years in this business. Most of the time, though, I prefer doing them for a credit. A wise man once said that you should let someone else pay for your juice. And that's what you're doing when you're doing a 1x2. If I really feel it's going to go down and I have to pay a nickel debit or something like that, I'll do it if my sentiment is strong enough. So it's not a deal breaker for me, but I really wouldn't want to pay more than 10 or 20 cents in terms of a debit, and usually that's on the high side for me. So typically, if the stars aren't aligned in the option world, so to speak, then I would probably lean more towards the short put, because I don't want to pay a lot of money for a put spread, because then you're kind of betting for the stock to go down that eventually you're going to be bullish on, and it gets just too confusing. And a lot of times when trades get too confusing, they just don't work. So with that, what I would recommend doing is step one, determine your sentiment on the underlying stock. Do you believe it's going to go up a little bit sooner, or do you think you might have a little bit more rougher roads ahead over the course of the next couple weeks or month or whatever time frame you're looking at? If you're a little bit more to the bullish side, I'd say look more towards the short put. If you're a little bit more towards this might have a little bit more of a rough ride here, then I'd lean towards the ratio put spread. From there, make sure that the option volatility lines up. The thing that I love about the ratio put spread is the fact that you're actually selling a higher volatility option than you're buying a lot of times. Meaning volatility a lot of times is higher the lower the strike of the put. So the further out of the money the put, the higher the volatility. Not every time, but a lot of times that's the case. And that's something that makes this ratio put spread a pretty powerful strategy. But like anything, it doesn't work every time. Make sure that you can get into a ratio put spread for a value, meaning it's either even money, or I would say around even money at worst. In terms of the short put, make sure that the premium's there for you to justify taking on the risk. Now, what's your rule? Do you want at least a 2% premium per month, a 1%, or whatever the case may be? That's more of an in-depth question depending on your own situation, but make sure those issues are there as well. If none of this works, meaning that you're going to have to pay an arm and a leg for this ratio put spread, there's no premium whatsoever in this short put, then the worst case scenario, if you really want to get into this stock at the 50 level, and this is the worst case scenario, well, just put in a limit order to buy the stock at 50. And that is what I have for today in the strategy block.
You were going good right until the end. You started talking about stocks. So we don't touch stock here on the show. What are you talking about?
Kidding.
This is the Options Insider Radio, not some stock trading network. What I think you're on the wrong show, sir.
Put in a limit price on a short put. Don't buy stocks.
I'll put a limit price on a call. How about a deep in the money call? How's that?
A deep in the money call would work. Although again, I like your short put idea. Put an offer on the short 50 put at $3. But no, I like the in the money call idea. Maybe like a $9 bid on the Jan 2017 40 calls or something like that. Is that what you're thinking?
If you can get into on a stock that's at $50, if you can buy the 40 calls for $9, then
I'll do that all day.
Yeah, I like that trade.
Me too.
I think I'm just going to go out and buy some calls on SPSX, because that's where the action is.
Can't lose there.
You guys are missing out on all these ratio put spreads. Far too logical and rational. That levered action. That's where the money is. All right. Speaking of the money, it's time to roll on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, it's time for Around the Block. Of course, like the man said, where we tell you what we're keeping an eye on for the rest of this week, at least until the next time we gather here together on Thursday. There are a few earnings, like we mentioned at the top of the show, to keep an eye on this week, which is always fun. Get away from some of the crazy macro stuff, focus on the micro, on the individual names, and the options activity therein. Tomorrow, of course, we've got CVS and Pfizer, got Avis, Starwoods. Wednesday, of course, the hype machine that is Tesla. reports, so be prepared for that. If you haven't voted in our poll yet, by all means, hit us up on Twitter and make your voices heard. Whole Foods as well. Got Priceline, another one that's been known to rock and roll on occasion. Mr. Greasy Meatball coming out on Wednesday. Good old Zynga. I'm talking about them in a long time. They used to be one of the Rock Lobster's favorites.
That was a Giovinazzi
That was
classic,
an Andrew favorite. Haven't heard so much about them.
What game did they have that everybody?
They had
played?
Candy Crush. Wasn't that them?
No, that's King.
Oh.
What did Zynga have?
They had something similar. I forgot the name of it.
It was something like that.
Maybe one of these myriad
It was
game
a Facebook game.
Game of whatevers. I thought it was Candy. Maybe it's not.
No, you know what it was?
Didn't they
it was,
buy one of them?
Farmville.
Oh,
right?
that was the one. Yes. Distributed online farming. That's what everyone's favorite thing. And yet apparently it was. So they're reporting on Wednesday. Got Kraft, FITBIT as well for a little bit of the wearable fitness action. Thursday, of course, Baba for our big Straddle battle.
They've got Words with Friends, too. I didn't know that.
Oh, did they really? Oh, so they've had a few hits.
They've had a couple of good ones.
Occidental, Chesapeake, a frequent offender on the odd block these days, coming out on Thursday. And then if that wasn't enough, you got Cigna, the market mover that is Cigna on Friday. I got some numbers as well, but it's all earnings this week. That said, Mr. We'll start off with you, Mr. Greasy Meatball. What are you watching for the rest of this week, at least until we gather together on Thursday?
Yeah, I think it's earnings, and a little bit of earnings, and a bit of ADP and non-farm payrolls. And do you have ISM this week as well, like Maine ISM, or was that today?
We do have ISM on the calendar this week. That's is that on Thursday?
Yeah, it's on Thursday.
Thursday, yes.
So we got a lot of big economic things, and I think you could see vol threaten some of the levels we saw 2 weeks ago if something like that happened. So there are some names I'm watching. The other thing I continue to watch, if you want to know what's been kind of the driver, it's been the Nikkei and the JPY USD trade. So keep an eye on the yen, keep an eye on the Nikkei. That's definitely been a driver of some movement in the S&P, if not crazy movement, but. If you want to know why we sold off 20 handles on Thursday, then take a look at the exchange rate between JPY and USD, and there's your answer.
Take a look at SPXS is what you were trying to say.
SPXS, yes.
That's where the answers to all riddles in the market lie in SPXS. All right, Mr. Uncle Mike, take us home, sir. What are you watching for the rest of this week? At least until Thursday.
You never want to go second for around the block when it's non-farm week in the middle of earnings season, because that's what everybody's watching. So what he said, I think that's definitely the thing that's going on right now. It's just, once again, it's really refreshing to not be talking about what we're not talking about. And I'm not even going to mention it because it's that joyous to not talk about it.
All right, and with that, we bring to a conclusion yet another scintillating episode of the Option Block. Talked a little levered products. Talk some interesting UA, 1x2 ratio put spreads, yet again with the levered products. Looking ahead, looking behind. Talk straddle battles. A lot of fun stuff on the old show today. But before we wrap up, let's check back in one last time with my cohorts, my partners in crime. Let's start off this time in the realm of St. Charles. Uncle Mike, what's cooking in the land of RCM alts?
Well, for those of you that would like an investment advisor who's happy to work with you and who works with option trading, even if...
I think what he meant to say, listeners...
We got a couple hundred...
Oh, there you go. You back?
Yeah, you hear?
Yeah, we
Hello?
I can vaguely hear you. I think the Skype gods, we're losing them, listeners, so surf on over to RCM Wealth Advisors and check them out, of course. And if you haven't done so already, pick up his book.
Yeah,
Go long.
And I think what he was going to say, if you just got a couple $100 and you're interested in investing, seek out Mike. He's one of the few guys that will give you active advice that actually gives a rat about you, and really as little as $50 to $100 a month, and he's still happy to chat with you. So look up Mike. Mike, he cares Tosaw, as I like to call him, and I'm not only an endorser, I'm also a friend.
There we go. Call up Uncle Mike. He'll roll your puts for you, as I like to say.
Yeah, he'll take. He's like the good uncle. He's not the dirty weird uncle.
Yes, that's also on his business card. Not the dirty weird uncle,
Yeah.
Uncle Mike. If you want to give him a call for yourself, of course, 312-212-3531, or hit him up at M2Saw at RCMFS.
The uncle that you will introduce your girlfriend to.
Not the dirty uncle, Uncle Mike. All right. I don't know if either of us are in condition to continue, but continue we must. Mr. Greasy Meatball, what's cooking in the land of Carmen Line in the pit?
All right, on Saturday we're doing our monthly Saturday class, this time on using options for long-term investing and hedging. And it's going to be a great 4-hour class. $167. Use the Option Insider special code 25_off, OFF, all capitals. Take an extra $25 off. Go to optionpit.com/long-term.
There you go, listeners. Use it. Don't forget the caps. If you get the caps, you don't get the deal. And on behalf of the Greasy Meatball and Uncle Mike. And Uncle Mike. Again, not the dirty uncle, and indeed myself.
Although Unky Mike is the one that pulls the quarter out of your ear.
Yes, that's true. He's got bad jokes and some bad card tricks, but other than that, he's pretty harmless.
Yeah, exactly.
And he'll roll your puts for you, so it's a great thing. On behalf of both of them, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and of course, for sending in such great questions. Didn't get to any today, we'll get to them next time, don't you worry. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.